Seems like they did that mug flawlessly. You can be angry at the administration, you can be mad at what they did, but I mean, if you're gonna do it, that's how you do it. Them cats went over there during the day. They ain't even fly in at night, guys. They flew in with daylight. They flew in daylight. And they waited until all of their generals was having a meeting in a bunker that wasn't even at the bottom of the bunker. And they sent a bomb down there and killed like 40 of their top generals. I mean, you might not like war, but if you're going to do war, that's how you do it. I'm not trying to say it was good, but I was sitting back like, dang, if you're going to do it, that's how you do it. Anyway, so we've been looking at our war stocks all weekend long, right? We were looking at different companies that can benefit from, things going up and down. And, that's what sucks about it. It sucks and it's great about being in America, right? You feel protected because you're over here in America, but you kind of want to turn your head when they have to do the things to what they say protect us. So I don't want to get political. I watch things. I analyze things. I have my certain opinions. You guys have your certain opinions. I hope we don't judge each other for it. I just analyze what I see. And because we're here to learn how to make money in the stock market, I got to keep that focus, right? There are people here that want to know, hey, all right, now that we're in this position, how should I position myself to either make money or... And then as adults, you can decide if you want to invest in those things, or if, your morals say, hey, I don't want to buy this or buy that because of what it does, then I understand that as well. I've been telling people for years that I don't buy cigarette companies. Like, I just won't buy, any companies that involved in, cigarettes, right? And that's just my personal thing, right? Doesn't make me better than the next person. It's just that everybody's going to have their opinion and have, you're the CEO of your company. You can decide what you want in your portfolio and what you don't want in your portfolio. So today we're going to talk about making $100 a day. So I'm not going to spend the whole 2 hours talking about, futures trading. However, we're going to look at different futures, and it's not just for today. We're going to talk about futures for 7 days, guys. I mean, not seven, for 5 days. All right. Monday, Tuesday, Wednesday, Thursday, and Friday. So we have a lot of time to try to figure out what this futures thing is and how you can use it to make money for you, your family, yourself, or whoever, right? And I've told people for years that I wish when I first started trading that the futures market was the first market that I learned, which is interesting because I learned the stock market, then I learned options, then I learned futures. I had no idea what futures was probably the first year that I was trading. I was trading stock and options. And then I don't even know maybe I turned on my TV. I don't even know how I even got introduced to futures, but I taught myself how to do it. I didn't take a class. And ever since then, I realized, this is why, I learned that futures market was far more, in my opinion, controlled than the options market. Now, when I was trading back in the day, before I became profitable, when I finally became profitable as a trader, I was trading stocks, options, and futures. I was trading Apple all day long. And I was also trading silver at the time, which is funny because silver didn't really become popular again until like maybe the last year. So I was trading Apple. All I knew how to do, guys, was trade Apple options, and I was day trading silver. And back then, I remember to this day, silver was $2,500 a contract. That's all it cost. You needed $2,500. And if you had $2,500, every dollar move was about 250 bucks. So I'm interested in seeing how much silver futures are today, because I haven't traded them in a long time, mainly because I can't even afford the mug anymore. But I remember back then it was $2,500. It was one of the cheaper futures. Micro futures had not been invented yet. That's how old I am, right? They ain't even invent micros, Joe. Micro futures had not been invented yet. And I was just day trading silver by myself, right? And then I was trading a little bit of gold. Gold was more expensive. So if I really wanted to kind of get more bang for my buck, I would trade gold. But if I was trying to be cheap, I would trade silver. So the reason why I'm saying this, and you guys don't realize it, is because I'm trying to train you into understanding that you need a certain amount of money to be able to buy a contract of the futures market. You need a certain amount of money to be able to trade a contract. And anytime you're able to buy a contract of whatever you're buying, no matter what platform you're going to, it don't matter what platform you go to, every dollar move, like let's say silver goes from $78 to $79 or $50 to $51. It doesn't matter what platform you go to. If you're in it long and it goes up $1, you make $250. If it goes up higher than that, and it's not $250 that's just in your account. It works just like a stock. It goes up in price, and then you can decide to sell it whenever you want to. All right. And what I love about the futures market is that the futures market is open 23 hours a day, 6 days a week. I want you guys to listen to what I just said. The futures market is open 23 hours a day, 6 days a week. That means, yes, you can trade it on Sunday. Yes, you can trade it at midnight. Yes, you can trade it at 2 a.m. in the morning. For you guys that got 9 to 5s, you're going to love the futures market because you can trade it at night. You can trade it at 8 o'clock. You can trade it in the morning before you go to work. But you can trade the futures market 23 hours a day, 6 days a week. That's 23 hours a day, 6 days a week. Hey, what's going on here? What is this? I got a treasure chest of some sort. I've never seen that before. All right. So in this room, if you were a day trader, I want everybody in the comment section to tell me this. If you were a day trader and you wanted to make money on a daily basis, what value are you looking at? In fact, don't tell me how much you want to make. What's the minimum amount of money you want to make a day if you decide, hey, I want to trade the market? What is that figure? My figure is 100. Like, if I don't make $100 minimum a day, I feel like my day just wasn't the best day. So let me see some of those values. 100. So a lot of you guys, 3,000. All right, DJ trades, 3,000. What's the minimum you want to make a day? And if you don't make that amount, you just don't feel like you had a successful day. Like you could have been like, I shouldn't even have showed up at the market today. Thank you, G7, the one and only. All right, I see $100. I see 130. I see 500. I see 400. I see 250, 500, 1,000. Okay. Most traders' goals are to have 1,000, but I want you guys to always think about a minimum also, right? I know you want to have a goal that you want to hit, right? I always want to hit I want to hit 5 figures. Like 5 figures is a great day. 5 figures. I make 5 figures in one day. That's a great day, right? But my minimum is like $100. I feel like I have too much knowledge and there's so many things that I can trade. that if I don't make at least, if my wealth doesn't go up at least $100 each day, I just feel like I'm not even keeping up with inflation. That's just how I feel. So I want you guys to always think about your minimum. And then I want you to think of an area that you want to make. I don't want you guys to get upset every day if you don't make 300 or if you don't make 1,000 or you don't make 2,000. Because if you do that, you're going to get discouraged when you come into the market. And a lot of you guys trade incorrectly, trying to reach your higher threshold of money. A lot of you guys come in here with unrealistic expectations, wanting to make 1,000 a day, but you're not using the capital that it. There's a difference. There's a comfortable. I know. And I be thinking to myself, you know how hard it is to get that number every single day? So I want a lot of you guys I don't want you to lower your expectations. All right. I want you to I want you guys to continue to have a goal, but I want you guys to try different things to get that goal. Like sometimes, guys, maybe you just got to put a little bit more money in your account. Like, let's just be real. Sometimes you just got to get your weight up. You just got to get your weight up. You just got to do something. You got to go work hard. Maybe if you go Uber, go Lyft, you got to go do something. But a lot of the times, enough capital and what you want to do with the capital that you do have, you're really pushing, like everything has to be perfect that day. And that's not how you should be trading. You should be trading comfortably with a comfortable amount. All right, so let's talk. Hold up, I'm muted right now. Hold on. They might be messing around. Can you guys hear me now? Because my volume is working. Can you guys hear me now? Can you guys hear me? All right. Dee Dee says she hears me. Safari Don says she hears me. I hear you. We hear you now. Yes. All right, cool. So it's going in and out. I don't know. Maybe talking about dinero, maybe the gods out there are looking out. All right, let me see what's going on with my speed. All right, let's see if it's on my end. Nope. My speed is perfect. So I just need to watch my mouth, all right? So I got to be careful about what I say, because you know I've been getting warnings lately. So I'm just going to be careful at what I say. All right, cool. So let's get into it. Let's talk about futures, all right? Let's talk about futures. So we all know, right, I don't want to be in TT jail. I don't want to be in TT jail. So futures, guys, in my opinion, futures is the easiest. Futures is the easiest concept, I believe, to out of all the products that are out there. You got your options, you got your Forex, you got your futures. I believe futures is the easiest, in my opinion. All right. Today, because we're going to talk about this for 5 days. So don't expect me to give you I'm not going to give you guys all the gems today. I'm just not going to do it. Because there's some people that's going to miss today. There's some people that are coming in late. We're going to talk a little bit each day. And then if you're around on Thursday or Friday, we'll put it all together. All right. Everything that we learned all week long, we'll try to put it together, even though I'm going to show you guys a couple of things, right? So let's talk about futures trading. What is it? What is it about? Why do people like to do it? Why do day traders love doing it? For one, when you're trading the futures market, I use the Thinkorswim platform that's offered. I use the Thinkorswim platform, and Thinkorswim, Robinhood in the future will also do it. They offer you the chance to be able to trade the futures market. You have to be approved to do the futures market. You have to be approved. So if you're not educated on it and you go to Thinkorswim and you say, I've never traded it before, you're not going to get approved, guys, because you're going to be working on margin. I don't want to scare you guys with the margin because futures, there's no way around it. Like, that's just what futures are. I don't want to scare you because if you understand what you're doing, you're going to be okay. Today, we are only going to concentrate on the indexes. That's it. In the futures market, you're going to be able to trade the indexes and you're going to be able to trade commodities. You got your indexes and your commodities. You got your indexes and your commodities. Your indexes are going to be like your S&P 500, the Dow Industrial Average, the NASDAQ, and the Russell 2000. That's all we're going to talk about today. Tomorrow, we'll talk about the commodities market because the commodities market is where a lot of you guys will get in trouble. All right. So we're going to talk about the S&P, the NASDAQ, the Dow, and the Russell today. A lot of you guys didn't know that you can trade the Dow, the Russell, the NASDAQ 23 hours a day, 6 days a week. So when the missiles, I said missiles and it paused. All right. Can you guys still hear me? Because it is going in and out. Hold on. Can you guys hear me? All right, cool. All right. So when when we went to Iran and did whatever we were doing over there, all right, the market was closed on Saturday. So it was the perfect time for the government to decide to do what they were going to do to Iran because it wasn't going to really affect the market. The market was closed on Saturday. However, it opened up on Sunday, but it didn't open up on Sunday until I think 6 o'clock. If I'm incorrect on the time that it opens, it's either 6 or 8. Please let me know in the comment section. Y'all know every now and then I make a mistake. So then the market opened up 6 p.m. or 6 or 4 or 8 p.m. on Sunday. And you could have been trading the market yesterday while we were live. And you could have traded all the way up until now. Well, the market just closed again at 6 o'clock. Okay. So, it's interesting that a lot of you guys didn't know that you can get in and out of the market, and you don't have to worry about the 9:30 to 4 o'clock p.m. time frame. All right. So that's what futures allows you to do. It allows you to trade all of the major indexes. And you can trade them 23 hours a day, 6 days a week. All right. So there's really no excuse on, hey, I don't have any time or I can't trade it. Now, you might not be able to trade it during the regular hours, but you might be able to find an hour or two here where you can look and see what's going on with the market. Right. So that's the beauty of the futures market. All right. So let's get into it. So before we even start, I want you guys to know my name is Joel Harrison. All right. Welcome. Thank you for the glasses. My name is Joel Harrison. Welcome. I'm a full-time day trader and investor. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 15 years and over 30,000 hours of trading and investing experience, and anything that I talk about today are going to be the opinions of Joel Harrison. I want to make sure that you guys do your due diligence. I'm here to explain it, but I am not the end all be all. All right. Now, I did get in an argument this week on whether I'm an expert or not. I'm like, guys, the definition of an expert is if you have over 10,000 hours of experience in anything, you're an expert. You might not be a good expert, but you're an expert. If you played T-ball when you was 8 years old and you played up until you was 13, you're an expert. You might not be able to build a business around T-ball. You might not get anybody that wants to take your T-ball class, but you're an expert. You guys get so funny about like words and things that people label themselves. So I'm an expert in stocks, options, and futures, but I do make mistakes, guys. Experts make mistakes. All right. I have over 30,000 hours. In fact, I don't know anyone that has as many hours as I have when it comes to this stock market thing. Because when I was trading the stock market back in 2007 and 8, none of you guys was buying stock. Y'all was into all other things, in the Avon, and some of you guys was in real estate, and y'all was trying to get me into all these multimedia things. And I was like, nah, I'm good. I'm going to do the stock market and real estate. I think I'm good. Anyway, so I'm an expert. I got to make jokes about it. This is a do-it-yourself room. Make sure you guys do your due diligence. That's why we have GPTs now to fact check. If I'm wrong about something or incorrect about something, please respectfully let me know the real answer in the comment section. All right. All right. Some people can't hear me. Some people can hear me. So I'm tripping off of why that's the case. Can you guys hear me? Let me know. Can you guys hear me? Let me know. Yep, you guys can. All right. I don't know what's going on with that. Some people can, some people can't. Some people can, some people can't. I guess they're trying to keep you down if you can't hear. They don't want y'all to know this information. All right. So here's a I don't really recommend too many people. I don't believe in people anymore. I believe in books and I believe in computers. Even to the point, guys, where I don't even believe in any of my friends when they give me golf tips or tips on the market. Like, I go to ChatGPT and I go to ChatGPT even as my golf trainer, and all of my golf friends will tell you this. They told me all last season, Joel, ChatGPT is not going to make you a winner. And y'all know what I ended up doing? I ended up becoming the Atlanta Tour champion in golf because of ChatGPT. So y'all can't, just like Kanye say, y'all can't tell me nothing. All right. And the same thing with the stock market. So you have something at your fingertips now that you can go to, where if you have a question about something, it might not be 100%, but it's going to be better than asking Cousin Al or Cousin Jim, right? I rather go to my GPT to get information. But this book here is one of the best books that are out there that's going to teach you patterns. So as a futures trader, you kind of want to know there's really only about 8 patterns, but you probably want to, have this book as a Bible. This is what traders use as their Bible. Just by having it sitting on my desk, it gives me that confidence that I'm doing what I'm supposed to be doing. All right. So pick that book up by Steve Neeson. All right, so let's get into it. Again, I use Charles Schwab. If you open up an account with Charles Schwab, you're going to have access to the Thinkorswim platform. If you open up an account with Charles Schwab, you're going to have access to the Thinkorswim platform. And with this platform, guys, you're going to be able to trade. Well, you have the opportunity to be able to trade Forex, futures, options. You can set up different accounts, retirement accounts, You're also going to have what we call a paper trading account. The paper trading account right there, that paper trading account is going to allow you to be able to trade the market without your funds, so you can develop that strategy that you want in the market before you actually put in real funds. They also have a on-demand feature. The on-demand feature, guys, allows you, I can literally go back and say, hey, I want to trade April the 7th last year at 1 o'clock p.m. You can go back to April 7th at 1 o'clock p.m. and I can buy options if I want to, or I can buy futures, or I can look at stock on that day and it will play it the same way it played that day. You can sit there and watch it in real time, or you can fast forward or rewind it. So take advantage of that, guys. Take advantage of it. All right, let's get to it. All right. So again, we're going to talk about 3 of the indexes. All right. We're going to talk about 4 indexes today. We're going to talk about the pulse of the market, the S&P 500. We're going to talk about the Dow Jones. We're going to talk about the NASDAQ. So if you don't know what the S&P 500 is, the S&P 500 is the 500 largest U.S. companies. And if you were to take a piece of each 500 companies and put them together and put them in a basket, that's going to be the S&P 500. The S&P 500 is the basis of all trading. It's the basis of all investing. It's the basis of all stocks. In fact, this is what we use to calculate the VIX off of. The volatility index is based off of options that are being bought on the S&P 500. Beta is based off of where the S&P 500 is at that particular time. S&P 500 is going to have a 1.0 beta for the rest of its existence. So anything that's higher than 1.0 is a lot more volatile. It has more beta than the S&P 500. If it has a beta less than 1.0, it has a fluctuation that's less than the S&P 500. So the S&P 500 is the basis of everything, which is why that's what we're going to look at first today. Now, you also have your Dow Jones, and you have the Dow Jones, and you have the NASDAQ. All right. The NASDAQ is what y'all probably see me if you're watching me in the group chat and you're watching what I'm trading. Normally, I'm trading either the NASDAQ or I'm trading the Russell 2000. All right. But a lot of you guys trade you'll hear people trade S&P futures, or you'll hear people buying options on the SPYs, which is the SPY. All right. But today we're going to talk about the futures contracts. Right. So there are 2 different types of futures contracts. You're going to have your regular futures contracts, which are, in my opinion, is probably, I'm not going to say it probably is, it's going to be too expensive for most of you guys to have one contract. It's only going to be maybe 1% of you that are going to be trading the big S&P 500 or the big Dow or the big NASDAQ. So they created the micros because listen, guys, now think about what just happened. The S&P, the Dow, and the NASDAQ grew so much. The indexes grew so much in the last 15 to 20 years that people couldn't afford the normal options contracts anymore. So they had to create a micro just so that you and I can continue to trade the market. That is letting you know, guys, that's giving you the confidence that this stock market is just going to keep growing and growing and growing and growing and growing, because they're going to keep printing and printing and printing and printing. And it's going to cause a lot of inflation. And you guys need to capitalize off of it. All right. So we're going to talk about the micro. We're going to talk about the micro contracts tonight. The micro. Now, a lot of you guys came here today thinking I was going to sell you guys on a bigger class. And now you're like, hold up. Joel is the real deal. This dude is actually educating. Ain't nobody on TikTok doing this. So if you want to share this out to people, let them know that this guy is teaching what some people charge $10,000. He's doing it for free. Tell your mama, tell your daddy, tell your friends. He letting all the secrets out. If you come to my room, you are going to learn. I'm not going to I have products. Everybody on TikTok got products. Hey, thank you for the glasses. That is no secret. I am here as a live host, just like any live host, to make money. I trade the stock market to make money. I trade the futures market to make money. I created a group chat and all this other stuff and super fans to make money. All right. But if you come in this room, you ain't got to spend a dime unless you want to. And you're still going to learn it. All right. I'm going to make you learn it whether you want it or not. If you in this room, you're going to learn. You're going to learn and you're going to earn. All right. And that's what I'm all about on this particular platform. All right. So, yes, we're going to learn today. Now, the indexes, you got the MES. These are like your ticker symbols. So if you were to go look up a ticker symbol is just, the shortened version. Like if I wanted to look up Apple, I would type in AAPL. Well, if you want to look up the micro ESs, or if you want to look at the S&P 500, you're going to do backslash. Is that backslash or forward slash? Forward slash MES. Is that back or forward? Forward or back? Sounding like a Leah. Back and forth and forth. What is it? Back, forward, back? I was terrible in English. I got good grades in it. It just didn't excite me. Forward. See, some of y'all say back, some of y'all saying forward. I see majority forward, so we're going to go with forward. So forward slash MES. So if you're playing around on your, just type in forward slash MES or type in forward slash MYM. Or forward slash MNQ. And you're going to pull up a chart that's going to show you guys the futures market. Well, that futures. Now, here's the thing, guys. You're hearing the word contract. Joel, I got to sign a contract. I don't want to sign a contract. I don't need a contract. Why is there a contract? They call it a contract because we're going to talk about tomorrow why the futures market was created in the first place. Today, we're just going to talk about the indexes because I don't want to confuse you guys on why it's called contracts today. But there is an expiration date. But when you're trading the indexes, guys, I don't really, especially if you're getting in and out the same day, the expiration really doesn't mean anything. There's going to be an expiration date. I don't want you guys to focus on that today. Now, I want you to focus on it tomorrow because that date, you better know what that date is when you're doing commodities. But when you're doing indexes, you don't need a contract because you're not buying the S&P or think of a contract like real estate. Like if I created a real estate contract, I'm buying a house. Well, you're not really buying an index, but there is an expiration date. All right. So we're really talking about $100 a day. We're not talking about your swing traders that want to swing trade these futures contracts. We'll talk about that later in the week. This is more or less for your guys that are getting in and out the market and that day trying to make, $100 or $200 a day. Or if you want to hold it overnight for 2 or 3 days. So more than likely, the contracts is not going to be a factor. But I still want you guys to see what it is. All right. You guys are still arguing in the comment section if it's forward or back. You guys are hilarious. Why don't you just ask ChatGPT like I do? All right. Now, when you're buying, you guys are hilarious. When you're buying a futures contract, if I wanted to buy a share of Apple, a share of Apple is going to cost a certain amount of money. If you want to buy a contract, a S&P or MES contract, it's going to cost you a certain amount of money. All right. It's not going to debit you and you're not going to see that money ever again. You just have to have this amount in your account. And for every amount. So for example, guys, when you look at this screen right here, you're going to see at the bottom, it's going to say margin requirement. In the comment section, what does that say? The last line, it says quantity times margin required. It's going to have, you guys are hilarious. It's going to have an amount. So if I wanted to trade the MES today, that's how much it's going to cost me. What price do you guys see? In the comment section, what number do you guys see? Now, if you're here to learn, you better write this down because somebody gonna ask 30 minutes from now, how much money do I need to do this? All right, so I see everybody sees that it's 24.58. Now, here's the thing, guys. The only thing that's confusing is that every broker is not going to have the same amount or margin requirement to buy one contract. It might be 24.58 on Thinkorswim. It'll be $500 if you go to NinjaTrader. If you go to Webull, if they do futures contracts, it might be $3,000. I'm just throwing a number out there. You might go to another broker and it might be a different value. But the one thing that's going to be the same across all of those brokerages is that for every dollar move it makes or ticks that it makes, it's going to be the same amount. So if you notice, it's going to ask you something. It's going to say at the top, quantity times tick, which is 25 cents. So what it's telling you is that every time this goes from, let's say you were at 68.83. 68.83 to 68.83.25. That quarter move, you're gonna make $1.25. I'm gonna run by that again. Let's say this moved from 68.83 and it moved to 68.83.25. That one tick up, which is a quarter. Every time the MES goes up a quarter tick, you're going to make $1.25. So for you smarty alleys out there, if a quarter tick is $1.25, how much do you make if it goes up a full dollar? So if it goes from 68.83 to 68.84, how much money do you make? 68.83 to 68.84. Great answer, Arwen. It's $5. For you guys that don't know why it went up $5, it's because a quarter, there's 4 quarters in a dollar. So if you go from 68.83 to 68.84, you're gonna make $5. All right, but you need $2,458. So the $1 million question is, well, Joel, how much money did I need in order to put myself in position so that when it goes up $1, I can make $5? What's the answer, guys? How much money did I need to have in my account so that when it goes up $1, I can make $5? Or when it goes down $5, guys, you lose $5. The answer is $24.58. Great answer. Now, different indexes are going to cost a different amount. The MESs might cost $24.58, and it's going to have its own dollar move. And if you go to Webull, if you go to Ninja Trader, doesn't matter who you go to, every dollar move, you make $5. If it go against you $1, you lose $5. Now, this is what you guys are going to love about the futures market. You're going to love this. If you have 2458.50 in your account and you're able to buy one contract of the ES, as long as you have 2458 in your account, do you guys know you can take unlimited trades? I'm going to say that again. If you have 2458 in your account on Thinkorswim, not Ninja Trader, we're talking about the margin for Thinkorswim. If you have 2458 in your account, I can get in and out the market, in and out the market, in and out the market a gazillion times in a day, and I won't be labeled a pattern day trader. All right. You want me to call it a point? Yeah, brother, man. But when I call it a point, Cass is like a point. So yes, he is correct. When you're talking about points, if it goes up a point, guys, you're talking about the actual asset. So if the ES goes up a point, 68.83 to 68.84, it goes up a point, but that point move, you make $5. Up $5, down $5. So let's do a little bit of math. Let's say you bought this at 68.83 and it goes to 6,900 and you sell. Let's say you get in at 68.83 and it goes to 6,900. How much money am I up? I want you to think about it. Let's say this is at 68.83. It goes to 6,900. How much money am I up? Well, let's do the math. 6,900, 68.83 is gonna be 17. Is that right? No, am I right? 2, 3, 7. 17 times 5. Thank you, Sean. 17 times 5. 17 times 5. I don't know that number. What's 17 times 5? 85? How did I get that answer? I subtracted 6,900 from 68.83. I got 17 points, but I make $5 a point. I'm up $85. Again, how much money did I need, guys, to make that $85? I keep saying this over and over again because I want you guys to understand. How much money did I need to make that $85? And Barrera was right. I needed 2,458. That's what I needed. Okay. If I had 2,458 in my account, I was able to buy one contract as it rolled up in price. If I wanted to sell it 17 points higher, then I could do it. Great question. What if I buy two contracts? It just doubles. So if you buy two contracts, guys, just think of whatever your profit is and you multiply it times 2. But you need twice the margin. So if you buy two contracts, you need 48 or 5, let's just say $5,000. You need 5,000 to buy two contracts. But now every dollar move, I'm going to make $10 because it doubles. Instead of $5, I'm going to make $10 per dollar move because I got two contracts. So I double the amount I can make. And remember, guys, I'm doubling how much I can lose. The futures market, guys, is very liquid. It's way more liquid than the options market. So whatever price you see, more than likely you can get out at that price. So the spread is not going to be that much. The futures market is very liquid. If you're trading the indexes, I don't care what time of day or night you trade, whatever price you see, you can buy it. Whatever price you see, you can sell it. You don't have to worry about slippage. Slippage is when you might sell it and you might lose 3, 4, 5 points. The options market, sometimes it's not. Sometimes when you guys are selling or buying your options, you're wondering why the spread is so wide. Because it's not that liquid. The options market is actually the least liquid market that's out there. All right. The futures market is very liquid. That means there's so much money there. You don't have to worry about somebody buying that from you. And guys, when you have these contracts and you're looking for people to buy it, it's not like I'm looking for an individual. You're doing everything from your computer, just like you would if you were buying a stock and selling a stock, or buying an option or selling an option. Super liquid. Okay. So the more contracts you buy, the more you make per dollar move. If you can afford it, if you can budget that into your strategy. All right. So there's cats. It's people that, guys, people will have, traders will have $50,000 or $100,000 accounts, and they'll trade the futures market. They won't trade they'll trade stock and futures. They don't even need the options market. They'll trade the options market if they're really trying to hit a home run. So you can make singles and doubles trading this. Now, what are the values? Let's look and see what we could have made or what we could have lost if we were trading the futures market. So let's look at, did I do today? Let's look at, I don't even know if we did today. All right, so let's look at today. Well, we'll get to what happened today, but let's just look at some numbers real quick. So you're looking at the MES. So when you pull up the MES, you're going to type it into the box. So it's going to look like this, right? Right underneath my chin. You're going to when you type MES to pull up that futures contract, you're going to see that it's going to tell you what it is. It's the Micro E-minis S&P 500 stock futures. We already know it costs $28.50 to trade it. So let's just do some numbers. I want to show you guys. Uh-oh, almost deleted that. That was going to be a problem. All right, bear with me because we're on TikTok, so I gotta, trying to teach you guys on this platform takes some real skills. All right, so MES is the ticker symbol. Now, you also see a date. It's gonna have a date here that says March the 26th. It's gonna be your expiration date. Now, we're getting in, dang, where is it? Oh, it's actually right above this arrow. It's right here. If you notice, it's going to say March the 26th right there. So I made it big so that you guys can see it. It has an expiration date, but when you're trading the indexes, if you're doing it long term, and we'll talk about that later in the week, you can roll it over into the new. Sometimes your broker will let you roll it over into the new index. Sometimes they make you sell it and then buy it again. But for now, we're not gonna get that complicated. We're just gonna assume that we're good. We got to March the 26th, right? So when you're trading this, there is no strike, there is no theta, there is no gamma like options. It's none of that crap. It's just straight 1 point, 2 points, 3 points, 10 points. You just do math. So let's say you got into this option. I'm sorry, this futures contract. We've been talking about options for so long. Let's say you bought this this futures contract. Dang, Joel. And let's say you got in around the $4,500 level. Now, where did I get that number? Well, you see beneath my chin, the ES moves just like a stock. So at one point it was at $4,500 and it moved up to $6,800. So if you were to buy that futures at that $4,500 area, let's say you bought that futures contract at the $4,500 area. And let's say you held it for 1, 2, 3, 4, 5, 6. Let's say you held it for 15 or 20 days. And it was before the expiration period. And it goes from 4,500, guys, all the way to 5,000. How much money did I make? In the comment section. It went from 4,500 to 5,000. How much money did I make? 4,500 and I got out at 5,000. Now, some of you guys are saying 2,500, but you forgot to add, some of you guys are saying 500, but you forgot to add how much I make per dollar move. You know how many points I made, but how much money did I make? It ran 500 points. It went from 4,500 to 5,000. That's 500 points. I make $5 per point. So how much did I make? $2,500. In the comment section, how much did I need to take this trade? Yeah, you do. You needed $24.58. That's it. Now here's what's crazy, and that was a good question. What if the margin goes up when it's time for that expiration? Well, you got to have enough money in your account to cover that margin. So let's say, and that happens, guys. I'm going to tell you why. So margin changes. It can be $24.58 today and tomorrow. It can be $24.58 today. It can be $4,000 in 2 weeks. So when you get to that expiration date and you want to stay in it even longer, you have to be able to cover that margin to be able to hold it. Now, a lot of the times, because you've been making money and that profit is going into your account, it's covering the margin. All right. So I just want you guys to understand that. But every now and then you'll get some ridiculous moves. And I've seen silver and gold like spike, like big time. I don't remember I remember trading. I told you guys I remember trading silver when they were $2,500 a contract. And then I remember it spiking to like $25,000 a contract. Not in a week, not in like 3 months or 6 months. But I remember seeing it spike really, really hard. All right. But we're not going to get into that. Like if you want to get into holding it over or what happens if the expiration date comes with that index, it depends on the broker that you're using. I can't give you an exact answer because it differs depending on who you're with. Some brokers don't even let you hold anything overnight when the contracts are $500. They'll be like, you can't hold this. You can only trade this during the hours. So that's why I told you guys the margin is going to be different. And that's up to you guys to figure out what that margin is, not me. But the amount that it moves and how much you make is going to be the same across the board. No matter who you go to, a point on the ES is going to give you $5. If you're trading the big ESs, it's $50. The micros, guys, are 1/10 the size of the large ones. So listen to what I just said. The micros are 1/10 1/10 the size of the big ones. And yes, there's some guys out there trading the ESs and they're buying 10. Guys, go and look at the ES sometimes and look at how many contracts cats are buying. Sometimes you might see like some ridiculous amount of money trading the futures market. It's very liquid. All right. So again, that $500 move. Anybody lost in the comment section? If you're lost, ask the question and maybe somebody in the comment section can help you. Futures are very, very easy to understand. Once you figure out, oh, I need a certain amount of money. But once I have a certain amount of money for that contract, that can change day to day. Every $1 move, depending on which one I'm looking at. So guys, just because the ES moves $1 and you make $5 doesn't mean the Dow does it. Doesn't mean the NASDAQ. So every futures contract moves differently per dollar move. And it's your job to figure out how to get that number. All right. So on your on Thinkorswim, they have this thing called a dashboard. All right. So if you're on the right side of your screen and you're picking like chart, your active trader, there's going to be something that says DB. When you click on that DB, that box that I showed you earlier, where it showed you the margin, that's going to pop up. When that box pops up, you're going to be able to read everything. You're going to see how much the margin is. You're going to see how much it moves per dollar move. All right. So let's get back to what ended up happening. So margin was $28.50 this day. If you had that $28.50 back then, you could have bought that. You could have held it as long as you could cover the margin. Every 1 point move, I was going to make $5. It moved $500. We all can do the math on that. It went from 4,500 to 5,000. That means 5,000 minus 4,500 is 500 points. I make 5 points. I make a $5 every 1 point. Okay. You would have profited to $2,500. You would have made a return trading the futures. Yes. Yep. Yes, Vaughn, you are correct. You are definitely correct. Wait. Nope, you don't get paid the $24.58. That's how much money you needed in your account to buy a contract. But you're gonna get paid $2,500. So you almost got it. So you needed $28.50. So you look up one day, you see you got $3,000 in your account. You're like, great, I can cover the margin. You decide when you want to buy. You decide to buy it at the $4,500 level. So when you buy at $4,500, you sit there and you chill. Now, you just needed $28.50 in your account. So the $28.50 doesn't go away. It's still in your account. You just had to have it in your account. The $28.50 is still in your account. And if you go up $500, you're going to have, think about this, guys, your $28.50 stays $28.50. You're going to profit $2,500. So you're going to look in your account and have like $4,300. Is that right? $4,300.50 in your account because you're going to profit $2,500. You're going to profit $2,500. Keeping your $24.58. You just have to have that in your account. You're going to profit every time it goes up $1. But you can also lose. If it goes down 500 points, guys, you lose $2,500. Now, it's not going to get you out the minute you break that margin. Once you buy it for $24.58, even if you're down $300 or $400, you're still going to be able to hold it. But if you sell it and then try to buy it again, you don't have enough money in your account. So if it goes against you and you start losing, and it's lower than the margin that you have, you'll still be able to hold it. But once you sell it and you don't have enough money in your account to cover another contract, you won't be able to buy another one until you put enough funds in your account to cover that margin. That margin is the requirement you need to be able to trade one contract. For every 28.50, you can buy as many contracts as you can afford. All right. Yes, you can do stop limits. You can do every single thing you can do with stocks. You can do any orders that you get. You got stop limits, you got trailing stops, you can do an OCO order. Everything that you can do with stocks, you can set alerts, you can do with futures. Yes. Yes, you can just leave the money there. Yeah, so whatever you profit, guys, it stays in that account. Yep, you don't have to take it out. Like it's not, yeah, that money stays in your account. And then you can buy more if you want to later. All right. Cool. So let's talk. Let me show you guys what happened today. Right. So I want you guys to understand that your contract does have an expiration period, which is March the 26th. But unless you're holding it for weeks, you don't really have to worry about that. I still want you to worry about it. As a consultant, I have to say you have to be aware of everything. But you shouldn't be like, oh, it's March 26th. Should I take an intraday trade? Guys, it's March 26th. It's you see one of this 26 days away. You're good. You're good. But it does not matter when you're day trading. It does not matter. Even if you holding it overnight, it don't matter what the expiration date is. But I want you to be aware of it. And when you're trading commodities, you better know that date. But we're going to talk about commodities tomorrow. Today, we're just talking about indexes. Just indexes. No, you do not need $25,000 in your account. Oh, you guys are talking about something else. Guys, to do futures trading, all you need is if the futures and you want to trade the MESs and you threw $3,000 in your account and that's all you had in your account. If I look up and all I have is 3,000 and my account is approved to do futures trading, I can get in and out the market a gazillion times and I will not be labeled a pattern day trader. You will not get in trouble. You can take as many futures trades as you want, as long as you can cover that margin. And no, the margin doesn't get taken up every time you use it. So if you have $3,000 and let's say you buy it and then you sell it, then it starts over. It settles. Then you can buy it and then sell it and then buy it and sell. Guys, everybody in the group chat was laughing at me today because I was doing the hokey pokey. I was getting in and out the market. I was getting in and out in 30 seconds and in and 30 seconds and out and in and 30 seconds and out. And they were like, Joel, are you going to take a trade? I was like, I don't know. It's too volatile. So you can get in and out as many times as you want. Now you got to cover the commissions. My commissions are going to be hella low because I'm an active trader. So I think my commissions are like, I don't know, like 50 cents or something. Some of you guys might have commissions less than that. So for every contract I buy is 50 cents. If I buy 5 contracts, I need $10,000, but it's only going to cost me $2.50 every time I get in and out. All right. So can you trade futures on Robinhood? Yes, they just started doing it. I have never done it on Robinhood. And to be honest, I'd rather you guys trade futures where you can see a chart. Because remember, it can go against you pretty fast. It can go like don't get me wrong, it's going to move more than stocks. So here's the order. Here's the pecking order. Stocks, especially stocks with 1.0, 1.5 beta, they're going to fluctuate about 1 to 3% every day. So if I have a $10,000 account and I was buying Apple, Amazon, Microsoft, Google, they move about 1 to 3%. So anybody trading with $10,000 with Apple thinking they're going to make $1,000 a day, you don't have enough capital to do it unless you take several trades, because it only moves about 1 to 3%. Apple doesn't move 10% in a day. The futures market, however, can give you a 10% move, even to the upwards of maybe 20% if you were to hold it for the whole move of the day. You can make 10, 20%. Now, I see in the comment section somebody says you can't lose 100% in a day. That's not true. I'm going to tell you guys a story. About me trading the futures market. I was trading the futures market one day, and I had never seen the indexes drop more than like 1,500 points in one day. I think it was like the Dow. So I was getting on a plane with my wife, and I had several futures accounts at that particular time. So I had one account, and I had about, I can't remember the actual number, but it was like 10,000 or 15,000 in it. So I don't know how much the futures contracts were at that particular time, but I maxed out the account. So I bought as many futures contracts as I can. The market was down 1,000 points. So I said, oh man, even if it drops another 300 or 400 points the next day, I had done my history. And I said, man, the odds of it dropping more than 1,000 points after dropping 1,000 points that day is like none, right? So I get on my plane, I go long in one of the futures market, in one of the, I don't remember if it was a Dow or the ES. I don't even know what I was trading. I get off the plane and I check my account, and my account has zero money in it. Zero. I look up and I'm thinking that there's a problem. I'm like, why is my account at zero? While I was on the plane, the market dropped another 1,000 points. It was down 2,000 points in one day. It was down another 1,000 points. And the broker got me out of the futures contract before I lost 100% of my money in one day. Not even one day, like however long a plane ride is, it was like an hour and a half. Lost it all. And that taught me a lesson. It taught me a lesson to A, anything can happen. B, I should have had a stop loss in place. C, you can lose 100% in the futures market in one day, because I did it. If somebody's going to find a way to do it, Joel's going to find a way. It might have been the only day that ever happened, but it happened, and I lost it all. I ain't get a penny back. So it was a learning lesson. So be careful when you're trading the futures market. But the swings are so big, you can be down 10 or 20%. So if you buy a contract for $4,500, you can be down, $1,000, $1,500 if it goes against you. So you definitely want to be active and know what that futures chart is actually doing at the time. Set alerts. You definitely want to look at it. Now, options, guys, we all have lost 100. If you haven't lost 100% in one day trading options, you ain't lived. You ain't lived yet if you ain't lost 100% in one day. All right. If you ain't lost 100% in the options market in one day, you ain't living, because we all have done it. It's so easy to do it in the options market. So be careful. So it's stocks. If I had to go in order of beta, it's going to be stocks is going to be your most controlled, then cryptocurrency, then futures, and then options. Options is always going to be the Mac Daddy of making and losing money. Futures is a little bit more controlled. You said, stop telling my business. You ain't lived if you ain't lost 100% in one day. All right, I'm just letting you know. Now, if you want to place an options, God, I'm getting my words mixed up. If you want to place a futures trade, it's very simple, guys. It looks just like a regular order. You're going to buy, you're going to hit the +1. Now, this is old, so I don't even know if it has my commissions here. What did this say? 22 cents? I can't even read that. But this is telling me that I want to buy one of the MYM is the Dow. My margin is going to be $1,177. That's how old this is. The MYM at that time was $1,177. Okay. So when you place your order, guys, just like you place an order when you're buying a stock, you buy one or buy two or buy three. It's going to tell you what the margin is. And if you can buy the margin, you're going to be buying it at that value. So at that time, I was buying MYM, which is the Dow futures contract at 25,598. If it goes up in value, I make money. If it goes down in value, I lose money. And I can get in and out and sell whenever I want to. Well, within 23 hours a day, 6 days a week. Now, how do you place a short order? It's just going to be the opposite. Instead of having a plus, you're going to have a minus. So if you want to short, guys, meaning betting on the market going down, you're going to sell the MYM at 25,648, and the margin is still the same, 1,177. Okay. And then, of course, the other numbers is however much money you have in your account at that particular time. Yes, you can. Well, they're not called puts. You're either going long or you're going short, Carlito's way. You're either going long or you're going short. So I want you to use the same terminology as if you were going long in stock or shorting the stock market. So buying long in the futures market, you're betting on things going up. If you're shorting the futures market, you're betting on things going down. The same dollar moves to the downside is the same dollar moves to the upside. So that dollar move just says if it goes up $1, I make $5. But if it goes down $1, I lose $5. Anytime you want, you can set stop losses. You can set limits. You can do all of that stuff. Now, when I'm trading the futures, guys, we got to talk about our risk to reward. We know we need 2850 to trade MES. Out of that 2850, how much am I risking on every trade? I'm risking about $100. I'm just going to say $100 today to keep it simple. So if you're risking $100 and you know that every point it moves $5, if you know that every point it moves $5 and I'm risking $100, that means if it drops 20 points, 20 times 5 is $100. I have to get out. Exactly, Safari. If it drops 20 points, I have to get out. Why 20 points, Joel? Because 20 times 5 is 100. Now, if you want to make $100 a day, I'm going to be honest with you. If 100 is your target, then your risk should not be $100. Now, you can be 1-to-1. 1-to-1 means I'm risking $100 to make $100. That's what we call 1-to-1 ratio. When you're trading, your risk to your reward should always be a minimum of 1-to-2. It can be 1-to-3, 1-to-4, or 1-to-5, but 1-to-2 minimum. So when I'm day trading the futures market, I'm actually saying I want to make $100 a day, but in reality, I'm risking $100 to to make $200 or more. I'm risking $100. I'm risking 20 points to make 40 points or higher. I'm risking 20 points to make 40 points or higher. Now, when my reward equals my risk, when my risk equals, well, basically, let's say my risk is $100, and let's say I'm up $100, I'm gonna pull my stop to break even. So as soon as I'm up 20 points, which is equal to my 20 points to the downside, I'm gonna pull my stop to break even. So at least the worst case scenario is I'm gonna lose just my commission, which is what I did today. It kept going my way. I was up $100 multiple times today because I was trading multiple contracts. I was up $100 multiple times today, but that wasn't my goal. But it went in my favor, and then it came back to break even, and I had to get out. All right, and that's fine with me because I have a different. Everybody's gonna have their different goals of the day. All right, so you want to risk, in my opinion, if you want to do this, guys, you're going to have to risk about $50 to $100 because it moves too much for you to try to only risk $10 or $20. All right. If you can do it, fine. I know a lot of you guys that will do it, but you'll do it in hours where the market really doesn't move that much, like in after hours. Like if you're trading at 8, 9, 10 o'clock at night, you can do a $20 risk to make $40. But if you're going to trade during the 9:30 to 4 o'clock when everybody else is trading, you probably want a minimum risk 50. You can get away with 50. You can get away with $50. But anything less than that, you're going to get stopped out a lot because of how much it fluctuates. All right. Yeah, Brittany, it just be moving. So it also depends on what chart you're looking at. All right. So let's look and see what happened today. Right. I'm going to show you guys the trade that I took today. The trades that I took today, which were hilarious. Go through the whole process again for you guys that came in here late, rolling up in here late, asking questions. All right. Why is my Thinkorswim not popping up? All right. Give me a second. Give me a second. I got to log out, log back in. While we're waiting, in the comment section, let me know what futures contracts you guys trade. For those that do trade the futures market, what futures contracts do you guys trade? What futures contracts do you guys trade? You say you risk 300 to get 600? That's perfect. I'm risking 100 per contract. All right. I might be risking that much too, but I'm risking 100 per contract on any micro. It don't matter what micro I'm using. I'm risking $100. And I can get away with it with my entries, even during the most violent moves of the market. All right, give me a second. When you're a TikTok live host, you got to be able to do this stuff on the fly. It's still not popping up. There we go. Bam. Look at your boy. All right. So let's say we wanted to look at Let's look at the MESs. I'm going to show you guys maybe, what time is it? 7. Dang, we spent a lot of time talking about this. So let me show you guys day trading, right? So let's say I wanted to day trade. Let's say you had time, it's on your day off, and you're like, you know what? I want to do a little day trading like Joel be doing, right? Well, I'm gonna be honest with you guys. When I'm day trading, it depends on, first of all, I want to make sure I understand. Now, I'm not going to give you guys these indicators today. We're going to talk about these indicators during the week. That's going to ensure that you guys come back. You got to come back. That's the only drawback into me doing this stuff for free. Y'all got to go at my rate. Now, what I also have on my charts is there's 2 things that you can do. So for you day traders that think that you all advanced, I'm going to give you guys something that's probably going to make your trading a heck of a lot better. I'm going to give you guys 2 trending indicators. So if you look at my chart, you're going to see my chart is really, really clean. There's only 1 or 2 other people that's out there that I know whose charts I can actually say, dang, your chart actually looks better than mine. It's only a couple of people out there. There's 2 trending indicators. One is and I'm gonna type it here. You're only gonna be able to find this indicator on 2 platforms. It's gonna be called the TTM trend. The TTM trend is an indicator that was offered by John Carter. If you've heard about the TTM trend, if you heard about the TTM trend before meeting me, you're probably meeting the person that actually that brought it mainstream. John Carter, like nobody knew who John Carter was. And years ago when I first found this indicator and I started using it, because of how many different people I've come in contact with and how many people that person came in contact with and then that person came in contact with. And this was all before COVID. There was nobody on the planet that I knew of that was using the TTM trend until I did it. Now, I'm not saying I'm the one that did it, but I mean, I got receipts. I'm like, I ain't seen nobody else using it until I was using it. Anyway, so TTM trend is 1. All right. Your own platforms, the Thinkorswim platform and the, TradeStation. All right. Those are the only 2 places I've been able to see that people had access to it. Now, if you don't have TradeStation or Thinkorswim, all right, you can use what we call Heikin-Ashi candles. All right. What you're looking at right now is a Heikin-Ashi candle. And you can find Heikin-Ashi candles on all of your platforms. In fact, I think you can do Heikin-Ashi candles on freaking Yahoo Finance. Now, why is this important? Because day traders, the one thing y'all can't get right is y'all can't get trend right. You can't get it. A lot of you guys are counter trending. A lot of you guys are using 50 different things on your screen. A lot of you guys are going back and forth. So you're confused. And because of time and the quickness of you being able to get in and get out, you need a nice trending indicator that's going to color code the chart so that you don't have any problems knowing what direction to go in. So early this morning, do y'all know early this morning, the trending indicator, no matter what we thought, what color do you guys see on my screen? What color is that? And this isn't even hindsight 2020. This is how the market looked at 9:40. What color do y'all see on the right side of my screen? Just put it in the comment section. Put it in the comment section. This is what I saw this morning. Now, I'm going to be honest with you. Everybody and their mama, including Joel Harrison, was stacked to go short all day long. All day long, we was talking about, we looking for the short, we looking for the short, we looking for the short. And you know what the trending indicators was telling us? Why are you short? Why are you listening to humans? Why are you listening to humans right now? Huh? Why are you listening to humans? Humans think they know everything. Humans don't know a damn thing. Y'all see, you see what this did? I'm going to go back. If you had a nice trending indicator on, this is what you saw. I didn't have to go back and forth between 12 different charts. I didn't have to do anything but go long with the indicator, because the indicator was like, yo, I was created for a reason. I'm called a trending indicator. Not because of what I think is going to happen, because I was created to show you trends. You dumb trader. This is what it was telling me. I'm not calling y'all dumb traders. This is what it was telling me this morning while I was trying to be short. I'm like, no, I'm going short. I'm going short. I'm going short. And the trending indicator was like, oh my God, this guy. What would Joe do? I know what I would do. I would be going long. And it started to go. It went up all day long. Now, I did try to short right there. I'm going to be honest with you. I didn't catch this long. I didn't catch it. I just sat there and cried the whole time it was going up. And I was looking at the NASDAQ, to be honest. So I wasn't even looking at the ES, but they were both going in the same direction. What you're looking at is the Heikin Ashi candles. If you were looking at the John Carter, it's going to look the same. This is how it would have looked. It didn't matter what you were using. That was the John Carter. That was the John Carter. Y'all see green? All you see is green. But this was the Heikin Ashi. And we'll explain Heikin Ashi probably on Wednesday. Joel tried to short right here because I like to just go colors also. You see at the bottom of my screen, you see red. You see this red here. Joel started shorting right where you see that arrow. And it came back up and it stopped me out at break even. I was up a couple of $100 and it came up. Then I tried to short again somewhere. Right here. I tried to short right here, right before I did consultations. And I did okay. You see that red again? And then it reversed on me again. But the interesting thing about it is that the chart had nothing but green on it. So let's do some math. How much money could we have made today if we had just listened to the indicator and not listened to Joel? What would Joel do? Joel didn't make me any money. All right, so let's say you saw these candles. You're going to learn about these wicks. When these wicks are up top, it's pointing in the direction you want to go into. When the green candles are pointing up, Joel was going to get in somewhere around here, halfway on that third candle. So I would have been in this trade right around 68.20. Now we're going to do the math, guys. For you guys that are just coming in, I would have been long somewhere halfway in between this third candle, right around 68.30. Let's do the math. Let's see how much Joel could have made you. Let's do the math. It went from 68.30, guys, and let's just assume that we got the maximum amount, right? Let's just assume we made the maximum amount. We're trading the MESs. So the MESs pays out every point, 1 point, that's 1 point to the upside, is going to be equal to $5. 1 point to the upside is going to be equal to $5. 1 point is going to be equal to $5. I'm going to let you guys do the math, not myself. We ran from 68.30 where my entry would have been, and the first place that it went to was this area before it went down in price. Let's just assume I was the luckiest man on the planet and I was able to sell it at 68.77. In the comment section, how much money did I make? If it ran from 68.30 to 68.77, how much money did Joel could have possibly made? How much did I make if I was able to catch the biggest move? I want to see the math. I see the number. I want to see the math. I want to see this times this equals this. You guys are smart though. You little smarty arts. The answer is, there you go, 47 times 5. Now, I'm gonna give a shout out to whoever gave me the answer first. So I'm gonna give a shout out to Safari Don for giving us the answer. Safari Don gave us the correct answer, but Tisha Lake gave us the math behind it. We moved 47 points, guys. We moved from 68.30 to 68.77. We moved from 68.30 up to 68.77. The difference between 68.77 and 68.30 is 47. But we make $5 every time it moves up $1. You could have been up $235. $1 million question. How much margin did I need on Thinkorswim? How much money did I need in my account to do this trade? How much money did I need? You needed, is that right? You needed $24.58. What percent return did I make on average? What percent return did I make? What percent return did I make? On average. On average. It's just an average. You don't have to give me the correct number. On average. About 10%. Remember what I told you guys? You can make 10% per day. So with $28.50, I can make $100 to $200 a day. I can make me a nice little salary. Guys, if you add that up, let's say you had a nice little week. You didn't lose at all. Now, let's say you lost. Let's say you lost one day. Because the average, if you trade the way that I trade, you're going to lose every 4 trades. You're going to lose. You're going to win 4 times, lose. Win 4 times, lose. Win 4 times, lose, right? So even if you won 4 times this week and you made $1,000 and then you lost one day, and you lost $250. Well, you're only risking $100. I forgot about that. Let's say you lost twice and won 3 times. If you win, if you have a 2-to-1 ratio, let's write this down. If you have a 2-to-1 ratio, 2-to-1 ratio. If you have a 2-to-1 ratio, that means every time I win, I'm going to win $200. Every time I win, I'm going to win $200. Every time I lose, I'm going to lose $100. So let's say I won 3 days this week and I lost twice. Let's say I won 3 days this week and I lost twice. That means I only won 60% of the time. How much am I going to be up for the week? If I won 3 times this week with a $200 win each time, and I lost twice this week, losing $100, how much am I going to be up for the week? Well, if I win 3 times, that's $600. If I lose twice, I lose 100 each time. Now, watch this, guys. What if I only won twice during the week and I lost 3 days? What is my profit for the week? What if I won on Monday and Tuesday and I had a 3-day losing streak and I lost Wednesday, Thursday, Friday? What am I going to end the week with? If I win, there you go. That is right. Smitty was right. If I win on Monday, and I win on Tuesday, that's $400. And I lose 100 on Wednesday, and then I lose 100 on Thursday, and then I lose 100 on Friday. I am still up for the week, guys, and I only won 2 out of 5 times. Guys, using a trending indicator, I'm going to be honest with you, you're going to win at least 51% of the time. Unless you just suck as a trader. You don't put on no stop losses. Like if you got a stop loss in place and you're using trending indicators and you're risking like 100 and you're pulling your stop to break even if you're profiting 100, you're going to be okay. You're gonna be okay. Yes, $28.50 is a lot of money. I get that. But you're only putting $100 at risk each time. If you're a really good business person and you know how to set your stop losses and your targets, and that's something you're gonna have to practice. I risk $100 to make $200 or more. I don't really want you guys to get stuck on how much you're profiting. I know you guys are like, huh? I want you guys to do this. Joel, how do you know when to get out? Well, check this out. If I was to get in right here, if I was to get in this area, and you're in that trade, even if you're up, what I want you guys to do is just put a trend line. When you break that trend or the candles start to go red, then you can get out. Because if you trade that way, like advanced traders trade, you're going to be able to capitalize on the upside. You're going to be able to capitalize on the upside. You're going to be able to capitalize to the upside. But your risk is going to always be the same. So you don't know what your day may be. And it's if you're going to make $1,000 that day or 500 or 200, it makes the day a lot better. Because when you're always thinking 100 or 200, 100, 200, 100, 200, 100, some of you guys can trade that way. You're methodic that way. I'm not. I'm trying to catch as much as I can because sometimes, guys, you just get lucky. Sometimes if you're in the right place at the right time, look at this. Look at this trade at the end of the day. Sometimes if you're at the right place at the right time, the market just delivers a move for you. And then you don't have to be like, you know how a lot of us can't. Now, I'm not going to lie. Today was one of the few days. I don't even teach this. Today was one of the few days, 1 out of 300 days you're ever going to see me come into the market already with a bias. That never happens. But you know what also never happens? We don't go and we bomb other countries. It's not often that we go and bomb another country. It's not often that happens. So if I see something that we don't often see, like if you see planes flying into buildings, or you start seeing things that can make people a little scary on the market, then you can come in with a bias to the short side. But I'm only going to get in if I see short setups. I came into the market today. It was no way you was going to get me to hit the long button today. But that's 1 out of 364 days. I normally come into the market, guys, neutral. In fact, guys, I usually have a bias to the downside because shorting intraday trading tends to, I don't want to say the way that I've traded or the way that a lot of us trade, usually taking those shorts are going to give us payouts a little bit faster than to the upside. Because when the market tanks and people start panicking, you really start seeing it fall. You'll see spikes to the upside, but boy, when you see people panic and you short, oh my God, the P&L just be exploding. So today was one of the few days that you're ever going to see me come in with a bias to the short side. And check this out. I came in with a bias to the short side, guys, and I still left the day only down. And this is funny. I was down $3 because of my commissions. That's it. I was down $3. $3. And I tried to short the market twice because I'm very good at my entries. I didn't short because I wanted to short. I shorted because my chart started to turn red. I shorted right here. Y'all see? When we broke that trend, I thought that was it. I was like, here we go, guys. We about to fall. Here we go. Nope, didn't happen. Then I said, oh, that was the fake out. Y'all ain't gonna get me on this one. Here's the fall. Here it is, guys. And the market was like, no, it's not falling today, buddy. We're going up. The market's going to go against everybody who thought the market was going down. And then at 115, it gave you a nice little rip to the downside. And then right here, it gave you another rip to the downside. You could have been long, short, and pieced together $1,000 day in the futures market. The futures market has 7 or 8 days within the market. That's the beautiful thing about it. And these are not short trades, guys. These are 3, 6, 9, 50. These are like 20 to 30 minute trades. That's a 30-minute trade. That's a 30-minute trade. That's a 30-minute trade. There's another 30 minutes and there's another 30 minutes. In 30 minutes, you can make 10% and then pull together 5% and then 10% and then another 5%. Well, Wesley, it looks like it was flat, but it was actually paying out. The S&P. Look at these moves. That's not flat. It was a 250-point move. This move right here, guys, we went from, let's do the math. Let's say at 115, you guys wanted to short. Let's do the math. We haven't done a short yet. Let's say you were short right around 68.93. Let's say you were short at 68.93. And let's say it went down to 68.75. How much money did you just make in about 30 minutes? 68.75. Do the math for me, guys. How much money did you just make from this trade went off at 118 and it was done by 2 o'clock. This was a 40-minute trade. You almost made $90. Was that 90? I can't do the math. 68.93. That's what, an 18-point trade times 5. That was $90. You remember the $100 a day? That was $90 from 120 to 2 o'clock. Remember earlier, you would have been long for 258. You could have pieced together 258, 90. That's 358. You could have pulled another one, I think maybe right here. Let's say you waited to the end of the day. This move right here. Let's say you grabbed let's say you waited till 1 o'clock and you finally got that short, which I should have done, but I was educating you guys. Let's say you made $90 right there. Then let's just say you were short all day. Let's say you took the 2 shorts I did earlier. That was a break even. Then you caught 75, 90 right there, right? Then let's say at 3 o'clock at the end of the day, it starts to go red again. And you're like, man, I'm going to catch another short. Well, it was at 69.06. It was at 69.06 at 3 o'clock. This is right before the market closed. It dropped in 15 minutes. We dropped from 69.06 to 68.72. Do the math for me. How much money did I make on that move? And that's just assuming that you caught the whole move, guys. We know that you probably maybe will get half of that. So 69.06 to 68.72 is another 24 points. Wait, 69.06 to 68.72. Is that right? Is that $170? Is it right? How many points was that? 28, 30, 31, 32, 33, 34. Oh yeah, that was $170 trade. Yep, 34 points times 5. That was $170 trade that happened at the end of the day from 3 o'clock to, that went from 3 o'clock, 3:06 to 3:21. That was a 15-minute trade, $170. So that was 170 there. It was 90 here. It was 258 if you caught the big move early this morning and you were long, short, long, short, long, short. Piece together a nice little $500 day if you were doing okay. Look, and it's still selling off. This is late tonight. When we came on, guys, think about this. When I came on earlier today at 6 o'clock. At 6 o'clock, guys, during this live, I want you guys to understand this. During this live, you could have taken a short trade while we were here. You could have learned this and said, let me go test and see if this is right. And what I should have done is I should have taken this trade with you guys live. We were around 68.84. We dropped, guys, by 6:30. Is that right? Yeah. By 6:24. We dropped to 68.70. During this live. 68.70. And this is if you were betting on it going down. You have to be betting on it going down. How much money would I be up? It went from 68.84 to 68.70. How much did I make? Well, it dropped 16 points. No, 14 points. It dropped 14 points, guys. I make $5 per point. 14 times 5, $70. Just while we were here. I could have made $70 today, guys, if I wasn't educating y'all. I'm just playing. How much money did I need to make that $70? How much money did I need in my account to make that $70? You're shorting right now. Get Fit says she's shorting as we speak. You needed $2,458 in your account. I don't want you guys to get frustrated because of the amount. You know what? You just got to get your weight up. You got to get your weight up if you want to trade futures. You just got to get your weight up. Get your weight up. Get your weight up. Now, there is the Russell 2000. That's the last one that we're going to look at. The Russell 2000, and I'm going to take a picture of it, guys. The ticker symbol is M2K. M2K, one of my favorite. I love the Russell 2000. Now watch this, guys. The Russell 2000 is M2K. All right, it's forward slash M2K. This is the Russell 2000 forward slash M2K. Now, I want you guys to tell me by looking at this. I'm going to take a picture of it. I'm going to take a picture of the dashboard. You guys are going to tell me. I'm not going to tell you. You guys are going to tell me how much money I need in my account and how much it moves if I want to trade the M2Ks. I'm going to pull it up for you guys to see before we do this last one. Sorry if I didn't get to look at you guys' stocks today. We'll look at it tomorrow. All right. I'm pulling up the dashboard. This is what you guys are going to see. How much do I need in my account to trade the M2Ks? How much, people? What do you see? Look at you guys getting the answers before I even pull it up. Thank you, Alex Zero. You need $1,116 to trade the M2Ks. Now, you say this is way better than charting. Now, it says that every tick I'm going to make 50 cents. So I get it. That means from 26.48.8 to 26.48.9 to 26.50. Every time it goes up a dime, I'm going to make 50 cents. So I always round it up to $1. So how much am I making every dollar move? Put it in the comment section. For every dollar move, how much am I making? For every dollar move, how much am I making? All right, Arwen's on it. Doggone it. With the Yorkie. How did I get that number? Because every time it moves a tick, which is a dime, I make 50 cents. So that means every dollar move, I'm going to make $5. I love it because it's just like the ES. I'm making $1 every dollar move. I make $5. But it moves in ticks. Well, they all. The ES has 4 ticks per dollar move. The Russell has 10 ticks per dollar move. All right. So now we got to figure out how much money we could have made. Now that we have all of that information. Now watch, guys. If you had taken that same trade this morning, let's say it started to go green and you said, man, I ain't listening to Joel. I'm listening to the trending indicator. Sorry, what would Joel do? I'm going with the TTM trend. Let's say you were able to get in at 26.06. Let's say you got in at 26.06 and you were long. And you were trading the Russell 2000, which is the Russell 2000 represents the 2,000 small cap companies, guys. It really, really moves. And let's say you caught this whole move to the upside. Let's say you sat in that bad boy all day long. Let me pull up a different chart. Let me pull up, let me take this to like a 5-minute. Just for monetary purposes. All right, let's say you rolled it all the way up from 2606 until it turned red. You were like, Joel, I held that bad boy until it turned red. All right. Let's say you rolled it all the way up. You put a trend line there and you said, man, I'm just going to hold it, Joel, as long as I can till it turns red. It started to turn red, the very first candle, at 26.35. How much money did I make? And how much money did I need? We went from 2606 to 26.35. 2606 to 26.35. Do the math. What's 26.35 minus 2606? It's going to give you what? 29, right? It's going to give you 29. What did I do? I took 26.35 and I subtracted it from 2606. That's going to equal 29, I think. Is my math right? Is my math mathing? Is my math mathing? I might be wrong. Y'all know sometimes I'm wrong. It's not often. Sometimes I'm wrong. All right. So we went from 26.35 to 26.06. I got out. I was long. But we make $5 per dollar move. That means it went 29 points, but I make $5 a point. What is that going to equal? What's 29 times 5? I can't do that off the top of my head. It's going to be $145. Now, how much money did I need to make that 145? How much money did I need to make that 145? You needed $1,100. If you had $1,100 in your account, you could have bought one contract of the Russell 2000. As soon as your indicator tells you to get in at 2606, you hit the buy button. And from there, if it goes up a point, I make $5. If it goes down a point, I lose $5. It goes up 29 points. It actually went up higher than that. It broke the trend. It started to go red. You decided to get out and you profited $145. So you're going to see your original 1116 with 145 on top of that. Now you got more money in your account. And you can do this over and 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 over again as many times as you want to, as long as you have $1,116 in your account. For every 1,116 bucks, you can buy a contract. So I can double up if I got 2,000, if I got 3,000. Then I would have made 145 times 3. If you can buy 5 contracts, that'll be about $5,000. You would have made 5 times that money. But the most important thing is that you made more than 10%. So if you have $1,000, guys, you can make $100 a day. That was the first trade of the day. The futures market, if you're trading with a 3-minute or a 5-minute chart, I encourage you guys to get away from that 1 minute. That 1 minute chart is addictive. Get away from it. The only time you should be using a 1 minute chart, in my opinion, is if the volatility index is above 30. If it's above 30, use the 1 minute. When it's below 30, use a 3-minute or a 5-minute. If the volatility index gets above 30, I'm going to be using the 1 minute chart with you guys. Because the higher the volatility, the moves are so big, you need a 1 minute chart because that 1 minute chart might pay out what you would normally see in a 15-minute chart. So as volatility comes down, you should be using a higher number like a 1, 3, or 5. Most really, really good futures intraday traders, we don't go higher than a 5 minute. 5 minute is usually the highest you see. If you're using a 15-minute candle or an hour, that's if you're trying to get the whole move of the whole day. If you're using a 15-minute or higher, because I want to get about 10 candles. So I can't even do the math. What's 15 minutes times 10? That's like a 3-hour trade, a 3 or 4 hour trade. The only way you should be trading a 15-minute chart is if you're trying to catch the 9:30 to 4 o'clock move. And in my opinion, because the market moves so much, I rather you guys cut the market up into 4 different trading periods. All right. 3 different trading periods. You got your 9:30. You got your 9:30 to 12. You got your 12 to 2. And then you got your 2 to 4. And if you want to add the fourth period is after hours. You got your 9 to 12, which is what I trade. You got your 12 to 2, where everybody loses money. That's the lunch period. That's when the California people come in trying to trade, because you can't trade at 6:30 in the morning. I advise you guys to just get up earlier instead of trying to trade that 12 to 2 period. And then you got your 2 to 4 period. And then your after hours is your fourth period. Okay. Atlanta Real Estate Goddess, if you wanted to start out as a beginner, I would encourage you to first learn what the futures market is and the stock market. And then I would trade on a virtual account, so Thinkorswim. So Charles Schwab, everybody's heard of Charles Schwab. Charles Schwab offers a platform called the Thinkorswim platform. The Thinkorswim platform will allow you to trade fake money during real hours. So you at least get a feel for how the market is moving. Now, some accounts are going to be what we call, is it real? Some accounts are going to be not real. It's going to be, I forgot the word they use. Help me out in the comment section, guys. Y'all know I'm getting old. But basically, it's gonna move with the market. And then some accounts are delayed. A lot of the times, if you don't have any funds deposited, they're going to give you a delayed account. So I always encourage you guys to get an account that's gonna move with the real market so that you can at least see what's happening. You also have an on-demand feature where you can go to different days. Like I can literally on the weekend, I can trade. Like, let's say I needed to practice trading in real time, an hour of trading. I can literally set aside 5 hours and say, I'm going to trade from 9:30 to 10:30 for last Monday, last Tuesday, Wednesday, Thursday, and Friday. And I'm going to sit there and trade it the way everybody else is trading it. The looks. Now, on-demand feature doesn't let you go to the week prior, but it will let you go to 2 weeks ago. So 2 weeks ago, I can trade Monday, Tuesday, Wednesday, Thursday, and Friday, 9:30 to 10:30, and I can literally take 5 hours out of my day and day trade the market for 5 hours and teach myself how to do it. So then once I create a skill and understand how it works, when I trade in real time, I get a better feel for what it is. Like nothing is going to be better than trading in real time, but it's going to give you a simulation of how it feels. But that's a good question. That's a good question. The futures market, guys, is open 23 hours a day, 6 days a week. 23 hours a day, 6 days a week. It closes on Saturdays, which is probably why America went and bombed Iran Saturday morning. They knew it was going to have a little effect on the stock market at that time because nothing was open. It was the perfect time to do it if it was the stock market that they were thinking about. Stock market was closed on Saturday. It didn't open up until Sunday at 6. And then everyone started trading the market then. But you got 24 hours to digest it. Then you had Sunday to digest it. Then you had all morning to digest it, which is probably why the market didn't sell off the way we thought it was going to sell off. All right. Normally, when you see a bomb go off like it did and we were at war with another country, history and statistics, and this isn't my opinion, guys, history and statistics would have told you that the market would have been panicking this morning, which is why I'm heavy on the statistics. And that's why 1 out of 365 days, I came in with a bias of being short. There was no way you were going to get me to hit the long button today. And I would have been wrong. However, because I'm a great trader, I took 2 trades today. They didn't pan out. I lost $3 off of commissions. That's it. And I was up. Even though I was wrong in the direction, I was up a couple of times $100. But I have a 2-to-1 ratio, and that wasn't enough for me. I wanted to get a nice big 200, 300 point move. That's what I was looking for today. I was not looking for singles. I was looking for a home run, and I didn't get it. And I'm cool on that. All right. But in the futures market, I can get in. I can literally do hopscotch if I want to, if I can afford the contracts. Now, each contract, guys, depending on the platform you're on, is going to cost you 75 cents to $1.50 per contract. So if I buy it, I need $1,100, but then I also get charged 75 cents or $1.50, depending on what platform you're on, per contract. So if I buy 5 contracts, I need about $5,000. It's going to be $5 times 75 cents. And then when I sell it, it's the same thing. So it's inexpensive, but it could add up, so be careful, because sometimes you could be getting in and out, in and out, in and out. And then you look up and you're down $40 and you're like, why am I down $40 and I broke even all day? It's because you're jumping in and out, in and out, in and out, which is great, but those commissions start to add up. Now, depending on the platform that you're on, thank you for the hearts, Mrs. Treetop. I appreciate that. But depending on the platform that you're on, commissions are going to be different. So there are differences in commissions, and there's differences in margin. Just because it's 1,100 on Thinkorswim, it might not be 1,100 on Robinhood or Webull if they offer it, or Ninja Trader. I know I hate saying Ninja Trader, but I haven't seen anything less than Ninja Trader. But I don't want you guys to run over there because they're Ninja Trader at some point, guys, it was $500 a contract. I think it still is. And it used to be $500 a contract for the big ones. I don't want to tell you guys that because you'll run over there and use the platform. I want you to get educated and practice. Lose all your funds, but you can go to different places where the margins are lower and you're still getting the same 1 point, 2 point, 3 point moves. All right. Now, guys, we're going to be talking about futures for the next 5 days. If you didn't get it today, that's fine. Let it sink in. Go to your chat. Some of the questions that you wanted to ask me, ask your GPT. You guys have to get into the habit of using your GPT. Guys, your GPT is smarter than 90% of the teachers that are out here teaching you guys stuff. If you want to learn about Heikin Ashi, go on ChatGPT and say, how do you use Heikin Ashi candles? If you're confused about the TTM trend that's offered by John Carter, chat, can you please explain to me how the TTM trend works and how does day traders use it? And can you explain it to me as if I was a 5th grader? Do y'all know that that's how I talk to my chat? I'm not saying that to try to be funny with you guys. That's exactly how I talk to my chat. I say, I always end with, can you explain this to me as if I was a 5th grader? Because I want to make sure that it explains it to me so that I actually get it, because it can give you the complicated answer and then it can dumb it down for you. Because a lot of the times, guys, we're smart, but you gotta sometimes get it in its most simplistic way, and then you catch on to it and you're like, oh man, it wasn't as hard as I thought it was. And then when you come back and we talk about it the next day, it makes more sense. So what I would do is, any questions y'all got, ask your GPT. I promise you, it's going to help you get there 85 to 90% of the way. And you can just go down the futures rabbit hole with that chat, and you're going to be surprised at what you learn. All right. Oh, you use Grok? Look, it depends on what you use, whether it's, look, I got people that love Gemini. I haven't turned to Gemini yet. A lot of people around me are saying that it's better than chat, but y'all know how I am. I'm loyal. I created, I don't know if you guys know this, but I created Ask Joel GPT, and Ask Joel GPT is on top of the Chat GPT platform. And if you go there, guys, you can ask it, like if you're on Chat GPT, go to Explore GPT, and when you go to Explore, type in Ask Joel GPT, and you'll see my GPT pop up. And a lot of the information that we talk about, I put it on that GPT. It even knows about the John Carter and the TTM trend. It'll explain everything to you. So I would go there. Oh, whoa, what's that? Treasure box is empty. All coins were collected. Send a new one to attract more followers. I've never seen a treasure box. I got a treasure box now? Live host, I've never heard of that. Like, the live just told me about a treasure box. So, all right, when I go into your room later, Mrs. Treetop, y'all can explain to me this treasure box. Thank you for the shades. All right. But yeah, Gemini, ChatGPT, Grok. What else y'all using out there? What's another GPT out there that's great for trading? Because ChatGPT is great when it comes to this stuff. Oh, you said my super fans get to put the treasure box up? Oh, okay. I didn't know that. I don't even know what it is, but thank you. DeepSeek. I've never used DeepSeek. Oh, it's for the super fans? All right. All right. If you want to become a super fan, you can always come up here to this heart, hit that heart. First of all, grab that heart. And I don't know if you guys notice, if you're watching and you support me in any way, you automatically get a follow. Y'all know after I do these lives, I literally go through the list of anyone that was tapping and sharing and gifting, and I immediately follow all of those individuals, because I can follow up to 10,000 people. I'm at like 5,000 now, so I'm only following like-minded individuals like myself that's supporting me and loves to talk about the stock market, and I'm deleting everybody else. All right, so I'll just let you guys know. You got Claude. Y'all listen to that. You got Claude. You got Perplexity. All right, so you also, if you guys can help me with my goal, I'm gonna put this music on, because what